Good morning, and welcome to Finance and Bagels. Today we're gonna see the $100 billion reason why you should not ignore a stock like Amazon if you're serious about investing and building your wealth in your investment portfolio. We're gonna uncover parts of the business you don't even suspect exist at Amazon, and how Amazon is investing billions of dollars into artificial intelligence to become the next big tech king out there. So let's dive in. We're gonna look at the business in three parts. Number one, retail and e-commerce, and we're gonna see how Amazon has transformed its e-commerce business into a growth machine. Number two, we're gonna see how Amazon Web Services is also the next big leg of growth for Amazon and how they're leveraging generative AI to bring billions of dollars to investors. And number three, we're gonna see how advertising is also an area where Amazon is growing very fast and bringing billions of dollars to its investors and yourself if you're into the name and the stock. So let's dive in. Number one, e-commerce. What happened at Amazon last year and the year prior and during the pandemic? You would probably be surprised to know that Amazon, even if it's the biggest retailers and e-commerce retailer in the world, they were not running their logistic operation in a profitable manner. Meaning that essentially they were running Amazon as a startup. They were not making the right business decision. I'm gonna give you an example right here. Let's say you were in California and you were ordering a product on Amazon and your product was not available in the next distribution center, fulfillment center in California. Amazon system and software would just send the order inside the system, asking all their warehouse across America if the product was available. And the first answer that was given was gonna be where the product would be shipped. So you could be in California, and if, I don't know, like New York had your product, the product would be shipped to you immediately, even if the product maybe was available in Texas or in a location that is closer to you. Amazon logistics software didn't care about making the right and profitable decision. It was only caring about making a fast decision, even if it was unprofitable. So there you go, your product would be shipped from the East Coast to the West Coast, even if Amazon and its investors were losing money on your order. So that's how they ran the operation before the pandemic and before 2021 and 2022, when they did the biggest business transformation in the world for a company of that size. So what happened during the pandemic and how that has led to the transformation of Amazon, so that now you can look at Amazon and the way they're running the business in a much more profitable way. So let's look at the story here. What happened in 2020? Well, during the pandemic, Amazon saw a surge in volume and a surge in packages order and packages that had to be handled and delivered to everyone across the US and also across the world. Well, that put pressure on the system, so they had a surge in volume. To service that volume, they had to hire a lot of people, not 10,000 people. They hired 500,000 people, so 500,000 people right there. So that has put pressure on their income statement, on their balance sheet, on their cash flow. Essentially, imagine you're hiring 500,000 workers and your business is not even profitable the way it's run, right? So what happened is that because they had a lot of volume, some orders were more profitable than others, so it was masking a little bit their efficiency. But when we came out of the pandemic in 2021, we could shop in stores and less online. They saw the volume decrease, but they still had those 500,000 people that they hired and they had to pay salaries. So running an operation where some orders are not profitable was not possible, and Amazon was operating at a net loss. So essentially what happened in 2021 is that their free cash flow got negative. They lost $14 billion. So that's what happened. And number two, in 2022, it continued. They also lost another 16 to 17 billions of dollars. So you see, you could be the biggest company in the world and still run an operation in a non-profitable manner. So what happened there is that the CEO said, enough guys, we have to rethink the way we make business, because this is not possible that every time we deliver a package, we're losing money on it. And investors also flew the stock. They said, we're not going to invest in Amazon if they're not making rational operating a decision when operating a business. It's like, for example, if you think about it, it's like if your friends open like a delivery company and they're making $100,000 a year, and it cost them $120,000 to deliver those packages. You understand that they're missing $20,000 here. So Amazon didn't go out of business. Obviously, they have cash reserve, so they use that to fill the gap. But 2 years of unprofitable result is not something investor liked. And as you can see here, on the reaction of the share price, well, the stock tanked. It went from $175 to $80, right? Because investors were like, well, unless you're profitable and unless you're fixing a logistic problem, we're not going to invest there. So Amazon did what, you know, any company in the world would do at a very, very large scale. The CEO said that we're going to rethink the operation and we're going to change everything. We're going to change how the fulfillment centers are run and the way we think about our business decisions. So we're going to switch the model from a national fulfillment center, meaning, as I mentioned, that if a customer orders something, it could come from anywhere in the US, to something more rational. And we're going to divide the US in 8 different regions, meaning that if a product is not available at a fulfillment or distribution center in your region, then the software is going to check if it's available at the next distribution center that is nearby, maybe like a few miles away, not on the East Coast when you're on the West Coast. So we're going to make more rational decision, and also we're going to close some fulfillment center and reopen some new ones. So we're going to reshape the operation at a cost, because Amazon invested $60 billion in 2021 and 2022 to make the operation of changing everything and the way the biggest e-commerce company in the world was making their operation decisions. So as you can see here, as they invested money, they were in negative territory. They were not making profits that year, and their free cash flow was actually negative. So they were having $48 billion in terms of operating cash flow, and they were spending 60. So there was a negative here. That's why here on the graph, as you can see, the line is below zero. So as an investor, you don't like to invest in a business that is not profitable and that is spending more capital expenditure than the money they're getting from the business. So for 2 years, they kind of suffered from it. If you were an investor, you know, the chances of success of a change of operation of that scale is 50-50, is either a hit or miss. So many investors flew the stock, they went to better opportunities, and they did not invest in Amazon because they were skeptical whether or not that once in a lifetime transformation of the business was going to be successful. $120 billion were invested over the span of 2 years. That's just like the same size as the GDP of Morocco itself. It's 6 times what the NASA in the US are spending every year. The US government is spending $20 billion for the space program. And Amazon, in the span of 2 years, spent $120 billion to revamp their operation. So that was a massive year for Amazon. But they were successful. So now, number one, if you consider investing into Amazon, you know that they fixed their e-commerce business, and that was not a small step. It was a big step, and the operations are now profitable. So they brought home, in terms of free cash flow, $30 billion, a little bit more than $30 billion. And for this year, in 2024, we expect them to double that amount of free cash flow. So that's very good news. We expect them to bring home more than $60 billion, and the year after, $85 billion. And your magic number in 2026, we expect them to bring home $100 billion of free cash flow, which is money that they can use to either give back to investors or reinvest in the business. So we know that, number one, when you consider investing in Amazon, you can rest assured that they have fixed their big e-commerce problem. Number two here is that when you invest in a business, you have to consider whether or not the business is profitable, and also if it's growing. And as we know, e-commerce is growing and it's not going anywhere. Actually, e-commerce as a business is still underpenetrated in the US, because we see that only, as you can see on the chart here, 16.5% of sales that have been made in the US are online, the rest is still physical. And if we look at China, China is already at 30%, so there is room for us to grow, and we see growth in the e-commerce space for Amazon growing at about 10% per year, which is huge for a business that is that mature. So you know you're investing in a part of the business that is profitable and growing, which is very good news. Number 2, as I promised, we're going to talk about Amazon Web Services. So what is Amazon Web Services? Amazon Web Services is mostly servicing clients on a B2B side, so businesses, to give them services like cloud computing. And to give you a real life example, if you think about companies like Netflix is operating a streaming platform, and how do you get access to those movies or series in almost real time and so fast? Well, it's because Netflix is a client of Amazon Web Services, where they use their infrastructure to store those movies. They use the database, they use the cloud to give you almost instant access to their services. But it's not free, because Netflix, to give you an example, they're spending $20 million every month. So they pay to Amazon Web Services $20 million so that you get access to their service and their platform. So that's about $240 million of revenue for Amazon and for you as an investor. So that's one example. Facebook is also using Amazon Web Services. They spend $11 million per month. LinkedIn, $13 million per month. So you see where I'm going with this. A lot of big business are using Amazon Web Services infrastructure with the cloud to provide services to you guys. Now, Amazon is investing a lot in the technology, and especially AI. So they've understood that AI is the next leg of growth, and they're focusing on the parts of AI that you don't see. So if you think about AI, by now we've all been using ChatGPT. So ChatGPT is really the front part of the application, the top layer. If you think about an iceberg, it's the stuff you see. But when you're using ChatGPT, I know you have an intuition where you know that for them to be able to give you that answer in a specific way, behind that, below that iceberg, there is data, a lot of data, and there is also data that has been trained. So there is models. So you see there is 2 components, 2 other layers that even if you don't see, you understand. And Amazon Web Services is focusing on the parts of the layers that you don't see. So they said that we're going to focus on creating the foundation layers of generative AI and the mid layer of generating AI, so that companies and businesses, if they want to build, model, or train some data, they can use Amazon Web Services service to actually get access to data and model, and actually develop application on the front end for you and I to use. So thinking about this, Amazon then has developed 2 super chips called Graviton 4 and also Trainium, so that applications and company can use those super powerful chip to train their data and train their model to give you answers for when you're going to use an AI application in the future. So that's just, in very simple terms, a little bit the part on which Amazon Web Services is focusing, and that part is growing fast because we estimate the growth in Amazon Web Services segment and revenue to be 17%. So they have a lot of contract, a lot of company interested in using their technologies and their chips. So that's also something that you need to consider. And Amazon Web Services is very profitable. The margin on average for this part of the business is 30%, so it's something very, very good. Number 3, as I promised, advertising. What's going on with advertising? Actually, last year, Amazon was only thinking about advertising via their e-commerce platform, right? So merchants were paying to get that sponsored ad to rank higher, in the search, and that would bring a little bit of revenue to Amazon, $13 billion. Now, Amazon last year, they thought, why not leverage our Amazon Prime video platform to put ads on it, a little bit like the TV. So they would sell those watch time and those minutes to advertisers who would pay to put ads in front of you guys. And as an investor, you see that it's almost a free way to make money. The platform is there, the platform is built, just push some ads and get some revenue. So as an investor, you know that Amazon is focusing on getting more money from the marketing side of the business at almost no cost. So if you think about it, Also, there's another feature that's going to bring money to Amazon, is that if a viewer does not want to watch the advertisements, they can pay $2.99, and that $2.99 subscription is also going to the investors and Amazon. So if you don't want to watch the advertisement, you're paying a subscription. If you watch the advertisement, Amazon is selling your time to the marketer and to the advertisement company. So you as Amazon or you as an investor are making money both ways. So you see, Amazon is planning to develop that service in 2024. They're pushing advertisement in the US, in Canada, as well as Germany, and they have planned also a rollout for the rest of Europe by the end of the year, and that's going to bring massive revenue to Amazon. Before that, they were making $13 billion from marketing. This last year in 2023, they made a little bit more than $48 billion from advertising without doing anything. And this year we plan for them to add $60 billion from advertisement. So again, there's also a next leg of growth. So if we recap a little bit what we said, we have retail that is fixed, that is going really well and growing at about 10%. We have Amazon Web Services, Generative AI, that is growing at about 17%. And we have advertising that is growing at 20% CAGR until 2025, massive growth in advertisement. So those are like almost 3 reasons for you to consider investing in Amazon. And also, Amazon is free cash flow positive. So this year we're expecting them to bring $60 billion of free cash flow at the end of the year. Next year, $85 billion, and in 2026, $100 billion, which is huge. If we look at a little bit of the financials in terms of Amazon, as you can see here, Amazon is almost a $2 trillion company in terms of market price. The stock price is at an elevated level right now. So obviously, you know, it's almost at a 52-week high. So it's the highest it's been in a year. So it's a little bit of a challenge to enter at, you know, right now into Amazon. You can wait a little bit for some weakness, but when we look at target price and everything that the business is going to generate over the next few years, my target price for the end of the year is $230 for Amazon. So I think close to here is going to be a good entry point for Amazon. If there's a little bit of a correction in the next few days or next few weeks, I would get a position. One thing can help you, see whether or not a stock is oversold or overbought, meaning if there is a lot of investors' interest at the moment that are kind of pushing the price of the stock up, and therefore is not a good moment to enter on that day, is the RSI index. The RSI index is the relative strength index, as you can see here on the graph. And essentially the brackets is that if this RSI index indicator is above 70, the stock is overbought. So you can wait a few days before entering and investing. Once it's correcting, when it's close to 30, it's a good time to buy the stock, because the stock is actually oversold. But right now, as you can see for Amazon, it's going towards 60, so it's coming down from 70 to 60. So it's starting to be more and more interested in terms of very short-term timing for you to get into the stock. So that's one of the tips I would share with you. Now, in terms of valuation, for those that are more advanced in finance, we're looking at 25 EV/EBITDA, which is a very good price, I think, for a company of that size, bringing that much growth in the next few years. And I definitely think Amazon is a stock to own, in a portfolio if you're very serious about building your long-term growth and wealth, because the company is profitable, the company is growing, and the company is bigger than ever and more efficient than ever as well. So if you like the video, please subscribe. If you learned something as well, subscribe, like, comment below if you own Amazon shares or if you're considering, entering the stock. If you like the transformation that they did, because it's a massive one and it's once in a lifetime transformation for a company of that size. So thank you very much for watching. I'll see you in my next video, and if you like the format, please like and subscribe. Have fun and trade safe. Bye bye.